Hi everyone, welcome back to my channel. Today I want to cover something that is probably will help you in your financial journey or financial advisor journey. So it's basically navigating market crashes. So I'm going to provide some insightful actions that you can actually do, assuming that if a crisis that is going to come. You probably see that the background is different because I shifted my camera, I shifted my table. This is a better view. I actually do not need to use the virtual background. So going back into what I'm about to share with you today is basically, let's assume that the market crashed tomorrow. So what's your next move, right? Financial advisors will be saying things like, hey, do not worry, continue to do dollar cost averaging, stick focus on the long term. Is it such phrases, right? If you are like this, I worry for you. Why? Because there might come a time that your clients might not just want you to say these three phrases anymore. They probably want more guidance for you. So I'm going to share some things that I think will help you with your approach towards market crashes, right? So let's explore how we can actually guide our clients through the storms, assuming storms will come. I mean, think about it, for the next 30 years, easily how many crises we are going to face. So on average, a crisis will come every 5 to 10 years. So it means in the coming 30 years of your career, of your business, about what, 6 to 3 crises that is going to come. So we have to approach this and give clients the ability, right, to have clear instructions or clear directions so that they can make a better and more informed decision. Okay, so I'm going to categorize investors into this category. So category number 1 is the investor is very reactive in nature, right? So they are very reactive impulsively to market fluctuation. Means a news article come, they might reach out to you, they might be very worried, there are people who tends to panic sell, or they hopefully buy something, right? Hopefully that it will go up, etc. So means they do not have a clear strategy, don't have a predictable or proven method to make money from the market. So what we can provide to them is a calm and composed way, a structural approach in terms of managing our money, in terms of the long term. So one thing we can do is really try to explain to them, okay, before the crisis, how will we prepare, assuming that the crisis is coming? And during the crisis, what are we going to prepare? How will the allocation be done in the crisis? Of course, every crisis will be very different, but yet we still want to understand what has happened over the last 10 years or 30 years, what has the market crisis, how the allocation back then should be, right? Give them the different scenarios, then they will have a better understanding, they will have conviction and confidence that you are able to navigate them, their money. Then the third stage of managing their money is coming out from a recession, what are you going to do, right? So educate them, giving them very clear and structural way in terms of approaching the market. Then the second group of people, they are very overwhelmed newbies, right? Means they are new to investing, they are very fresh in terms of investing, they are sometimes confused with all the jargons, and they are probably worried and they might freeze and feel stuck, assuming that a first major market downturn happens to them. And they are bombarded by very conflicting advice because there's so much news, there's so much noise, right? And the fear of making the wrong move is there, right? So what we can do is, number one, tell them that investing is not a knowledge game, it's a heart game, HEART. So what we do is to help them to eliminate emotional decision. So making the decision based on clarity, help them simplify complex concepts in regards to investing, giving them outlines also. So likewise, step by step, so that we can tailor their investment towards their personal goals and their personal risk profile. Then the third group is where they probably see themselves as seasonal investors. But again, is they're very skeptical of mostly everything, right? And they may be seasonal, but yet, right, they haven't found a way to be profitable consistently. Why? Because they jump from one method to another method to another method. So what we want to tell them is we want to help them anchor the way they invest their money. Don't go from basically a silver shining object syndrome, going from one asset to another asset to another asset to another asset. At the end of the day, they do not really gain the good outcome from there. And because they are slightly more advanced, we want to share with them some indicators that we evaluate the market. Like for example, recently I've been talking about an inverted yield curve. I talk about hidden indicators that will determine whether the recession is coming or not. So give them that framework that you have or develop in your toolkits, then you will have a better understanding of you. Then the next thing that I want to share with you is just basic 3-step frameworks, right? Assuming crises come, we can really use this 3-step framework to navigate, right? Be it what kind of personality, what kind of behavior they are presenting to you. So number one, the first step is actually assurance in your presence, right? Please assure your clients that you will be with them every step of their path. Like for me, during this Russia invasion of Ukraine, I was actually messaging my clients straightforward and tell them that, hey, let me digest whatever that has happened and let me come back to you in the next few days or within one week's time. I will give you a good assessment of the situation. So after assuming you have assessed it, and like I say, please be present, right? Don't be like some of the advisors out there. They basically MIA, they went missing, they do not reply their clients, and their clients are worried about their assets. Don't do that. Okay, second thing is clarity on the situation. Provide clear insights into the current market dynamics so that, because like I said, right, you are to help them with making informed decision, cut away the noise for them, and simplify the process, the situation to your clients. Third step, most important, actionable steps for their assets, right? Discuss how can we strategically or tactically move their assets among the assets that you have in your own platforms or in your own investment toolkit during downturns, right? And remember one thing, even during downturns, your clients can still make profits from it. So it's always understanding how to do that, right? That is the real challenge. That's why we need to know some technical indicators or some economic indicators that are unknown to individuals who are out there. And typically, these indicators are used for traders and asset managers out there in the world. And I used to be a full-time trader. That's why I understand all these indicators, how it works for our clients in terms of asset allocation. So again, as you all know, that this is a consulting coaching program that is designed to is exclusively helping you, one-to-one approach. And do know that it will really refine the way your advisory skill set will be, right? And I hope that we can have a discussion on this if you are open-minded. So last thing, I want to remind you, okay, financial advisor, your greatest asset isn't just your knowledge, your market knowledge, is your ability to guide your clients through uncertainty with framework, with conviction, with clarity, with confidence. So do reach out, if you want to understand what do I do with you in a one-to-one coaching program, okay? And let's transform the market downturns into opportunities for growth and success. All the best to you. See you again in the next video. Bye-bye.